Happy Friday, Miami. I'm Peter Zalewski. I'm a condo consultant. I'm the founder of the Miami Condo Investing Club. I have my co-host, Daniel Hernandez. He is a real estate advisor. He works for a company called Compass Real Estate. I look at macro trends. Daniel's in the trenches, grinding it out, going after condos as well as single-family houses. Every Friday at 4 o'clock South Florida time, we're going to give you our take. Two locals, been on the ground for 30 years each, about what's going on in the South Florida condo market. We have 5 stories. We're going to discuss them. We're going to tell you whether they are a buy, they are a sell, or they are a hold. Daniel's going to take the mic from me, and he's now in charge. Here you go, Daniel.
What's going on, Peter? Hey, I just want to throw it out there. This is our 10th episode.
Woo! We made 10. Who would have thought?
10. I think the statistics out there are somewhere like 99.9% of podcasts don't make it past episode 7. And to commemorate that, we are live on Instagram for the first time today. So I hope nothing breaks. For everybody else watching on YouTube and Substack, welcome back. My name is Daniel Hernandez. To my right, left, I don't know, up, down, wherever you're watching, is Peter Zalewski. So our format for this is kind of like PMI. If you ever watch PMI, Part of the Interruption, PTI, Part of the Interruption on ESPN, we have a number of topics that we're going to go through. 7 minutes a pop. If we go over a little bit, we go into overtime, and we've allocated time for that. But we have a lot to talk about today, so I'm going to jump right into it. Peter's a very analytical gentleman. He does condo tours, walking tours throughout various parts of Miami every Saturday morning, and he's going to tell you a little bit about that. And in preparation for that, Peter pulls data. We're very data-oriented here at Buy, Sell, Hold, and Peter's seen a few harrowing statistics coming out of the Brickell condo market. You want to talk a little bit about that?
You were asking about this report we came out with last night. We published it on tonight. It's in anticipation of a tour I'm doing on Saturday. I'm going to be walking people around the Brickell Avenue area. I'm going downtown Miami, about 101 condo projects itself. So in running the data for tomorrow's tour, took a look at pricing. 11 of the 101 condo projects in this stretch from the Eddie Rickenbacker Causeway north of the Miami River, the Biscayne Bay, west Interstate 95, 11 of them are now currently priced, active listings, below what they were in the winter buying season when people actually made acquisitions. They did deals. The biggest discount, 18%. So if you would have bought in the winter and you revisited that project today and you offered full asking price, you get 18% less pound for pound for that particular unit. Some of the buildings, Daniel.
You're going to tell us what building it's in?
That one is, I'll look it up shortly. I think I got off the top of my head, but I don't want to misspeak because it's the type of thing that could be market moving. But one of the buildings, Daniel, on this list, a famous Ugo Colombo building.
Ugo.
He builds quality. One of his buildings, people are looking to unload. They're looking to sell. Which building is it? Take a shot, and I will give you a hint. It has something to do with something that's erotic, and it has to do with the ocean. Take it. That's going to be in the base of the building. It'll be a ground floor retailer.
Bristol?
No. Well, Bristol's on the list.
Bristol's on the list. Actually, if you're in the market and you want, as Peter says, the worst unit in the best building, the dumpster
overlooking the dumpster.
You want, and it's not the dumpster; it's the tennis court and the security thing. But you're not looking at the water. You're looking in the wrong direction for all intents and purposes. There is a unit in Bristol right now, 2-bedroom unit. It's a large 2-bedroom unit, and you can steal this thing, and you will have the worst unit in the best building. Because I love Bristol. You know I love Bristol. But wait, what's the unit? What's the 18% discount unit?
Well, the 18%, according to the data, which was pulled last night, it's going to come in as free to catch the point. It'll be on Brickell Key. Current ask, $830 a foot is the average ask. If you would have bought during the winter, you would have paid an average of $1,015 a foot. 18.2% discount that's now in place. What are some of the other buildings? 500 Brickell. We all know that one. That one's right there across the street from the Viceroy as well as the Baccarat. Then you got 1010 Brickell, which is right across the street from the one that I was quizzing you about, the Ugo project, which, by the way, the name of the retailer is called...
You're talking about Flatiron? No.
Brickell Flatiron, 3%, 3% discount right now. versus what you would have paid in the winter. So anybody who bought during the winter, you might want to call that realtor up and say, hey, I thought you said this was a great deal and was only going to be appreciating. Anybody who held back and did not buy, you might be getting some wiggle room, and you also might have an opportunity to go in there and start lowballing, because if the ask is already 3% below what they paid in the winter, you might be able to even lower that price even more.
Hold on, I'm going to pull this up. How many? What are the in the Flatiron? There's like 600 units in there total. It's a massive, massive complex.
You want those numbers? Let me give it to you right
numbers. Tell
now.
me those numbers. Tell our
I will give you those numbers just because
current viewers what those numbers are.
It is our 10th episode anniversary, so I'm going to feel free to share it. If you want to get a list of all these condo projects and what's going on, come out, take my tour. I give everybody a list of all of the condo projects in the area while we wander around 4 miles or so. The Brickell Flatiron. Let me see. I'm pulling it up right now. Looks like it has a total of 549 units, of which 32 are on the market today. 1.9 a door.
That's not bad. That doesn't pass our 10% threshold. So
no, it doesn't pass it.
Everybody watch it. We see a building, or if you see a building, or somebody tells you about a building that has more than 10% available inventory on the market, that's a red flag. It's also, by the way, a red flag if there are no units available, because that means there's really no liquidity in the building. You can't comp, you can't price. It becomes a more difficult exercise to transact in that building. So the sweet spot is somewhere between 5 and 10%. Once you start getting into 15 and 20%, you better as hell be the cheapest unit in that line, or, well, frankly, you might not be able to sell the unit.
And that's a great point. Daniel, some people don't go price per square foot. They get caught up. They like price per door. Just to give you context, today, if you walk in the Brickell Flatiron, your average ask is $1.9 million a door. If you bought in winter, you pay $2.1 million a door. I'm sorry to laugh, but, and also too, Daniel, those 32 that are for sale in Brickell Flatiron, they've been on the market 157 days. If you bought during the winter, they were listed, they went under contract, and they closed. Grand total, 43 days. So you can see there's a movement right now in Brickell Flatiron, as well as the other 10 projects, which they've already begun to cut pricing on. And what will probably follow is other buildings who basically unit owners who want to get out the door, they want to move the product, they're probably going to start cutting as well. This is typically how the doom loop scenario plays out.
And in Brickell, I know we've been talking a lot about the Central Business District World Center over the past few weeks. But in Brickell, what's the next building to deliver?
The next building that will be coming online, let me think. I'm thinking about Cipriani. That's not there. No. Lofty and the Standard is not yet there. What's already topped off? Viceroy's far along. Baccarat's far along. The next one to come online, I think I might be stumped on this. It might be one of the smart Brickels. You know, there's a whole series. There's like 3 smart Brickels. A lot of them had proceeded. They're kind of west. You know where the McDonald's is, right off Cayocho or 8th Street?
Yeah.
And by the way, just east of Alligator Alcatraz. If you go west, you go to Alligator Alcatraz. You go east, you end up at the Bay. So smart Brickell right in and around there, just to the south.
Swing. You have the Mandarin on the easternmost part, and then
well, let's see if they build that. Let's see if they build a Mandarin. Well, you know, that's another question.
They sold Brickell City Center and they sold to Mello. So I mean, what that $700 million, that should get you at least a lobby.
Or you sit on the sidelines, you play it out, you sell off the dirt or you JV, and you don't take the risk. So, but that's a completely different story.
Am I? Wait, we didn't talk about this. I have a surprise for you, Peter.
Nice. Hey, 10th episode anniversary. Let's hear it.
I have a surprise for you. Your favorite YIMBY publication, and it's not the YIMBY, but and this I'm reading directly from the article from the Next Miami. Additional details have been revealed for potential future development at a Brickell property reportedly owned by
Ken Billions.
$10 billion.
Which is an inside joke. If anybody doesn't know, Ken Griffin, I made a mistake. I called him Ken Billions, and now we've sort of decided that that's the way we're going to refer to him. The hedge fund owner.
Billions of dollars. I mean, he's no Zara guy. I mean, I think he's got about half as much money as the Zara guy, who just purchased another building across from where this guy is putting his building, supposedly. But they submitted drawings to the county, if that really means anything. I know it doesn't mean shit to you, Peter, but they
listen. 10 billions bought. He bought his dirt 2.5 years ago. They've come out. They've released all kinds of paperwork. They talk about how Miami's going to replace New York as the capital of the United States, capital of the world. They're going to break ground third quarter of this year on their $1 billion office tower. Yeah, we're getting to the end of July. He's got 2 months to go. Let's see if he actually pulls the trigger and puts a shovel in the ground. I still say no, not happening.
So this is an interesting tidbit, though. Previous plans never called for residential, right? If I'm.
Oh, no. It was all office. I think there was the hotel component, retail.
The future phase of development is proposed to include up to 300 residential units, the filing said. So,
nobody must want to lease office space like Stephen Roth's, who owns the Dolphins and is with related group or related companies. I don't know. I always get too confused. George Perez is one. Yeah. So Stephen Roth couldn't put up an office tower, and Swire decided to dump the dirt to the Mello Group, and maybe Ken Billions can't put it up either. And now he's looking to recalibrate and maybe add some residential because the office space, maybe there's no demand.
I don't know.
Which I've been saying.
I think Ken Griffin Tower is going up.
You think so? Well, I mean, listen, we're almost through July.
I don't know what it's going to be called, but I'm calling Ken Billions' tower the KGT. That's what we're going off of. KGT, and there's going to be. Listen, if you want to hire me or Peter as a consultant for this, we've come up with wild ideas. Private school, put a private school. We parking. You can put some parking in there. If you want to put a paddle court or 7, there's none in Brickell at the moment, but we can talk about that at another time. We're over time on this topic, but we're transitioning to transit station.
Well, before we do that, are you a buy, hold, sell on condo prices or condo projects continuing to go on downward? 11 projects
are cut condos in Brickell for the last 6 months when they should have been selling them, and now unfortunately you're taking what would you say? What was the median haircut? 12%, 10%?
I didn't run the number because they're all averages. Then you got to come over to mean, and so basically between 3% and 18%, 3 to cut stuff over on Brickell Key has an 18% price cut.
Well, so
is this the beginning of a trend?
You should have sold 6 months ago, but if you didn't,
is this the beginning of a trend, or is this simply an anomaly? It's 10%, 11% of the overall Brickell market. The prices are lower today in the summer than they were during the winter. Is that simply an anomaly, or do you think this is something that will gain momentum?
It's gaining momentum.
Yeah. I'm a buy on that. It's gaining momentum, and we're going to
I'm a buy on it's gaining momentum, but on the Miami Brickell condo sell-off, we're selling condos, or we're buying the idea. We're buying the idea. It's a buy.
It's a buy. Correct.
It's a buy.
Correct.
So, speaking of more and more inventory, we have an affordability crisis here in South Florida, here in Miami, and something we talk about a lot, something we're quite passionate about. And the county has its RTZ, rapid transit zoning. Tallahassee has passed the Live Local, which allows for developers to effectively supersede municipal building codes to build workforce housing. And now, as of yesterday, the City of Miami Commission has its own enhancement of this, the Transit Station Neighborhood Development Ordinance, and they've given more power. And I think, by the way, this has a lot to do with the development of the neighborhood that they've dubbed now Little River, right? So Victory Homes Development is going all in there. They have very specifically said that the historic districts won't be affected by this, so they're carved out. And one of these districts is pretty much all of Coconut Grove. So that 27th Avenue corridor south of US 1 that I always talk about is, the next luxury row. It's excluded from this, but it opens a door for a potential slippery slope, and it's nothing that we haven't seen before, where you give an inch and they take a mile. Interestingly enough, another one of the exclusions from this is Coral Gate. Did you know Coral Gate was included in one of these neighborhood zones, including in addition to Coconut Grove? I was looking at the GIS map for City of Miami. So there's Coral Gate, which is like totally apart. There's 2 zones in Coconut Grove, and then there's a whole district carve out in Wynwood. But all the rest of City of Miami is fair game for this. And effectively, the ordinance says that if you live in one of these transit nodes, so just draw a circle 1 mile around any transit stop. So just basically along the Metro Rail corridor, folks can build up to 12 stories. And that will supersede Live Local. And this is interesting, and I want to point this out. Live Local requires, they have their AMI, their average medium income index, right? And so to live in a workforce housing community, you have to make, and don't quote me on these numbers, but I think it's about 120% of the AMI you can make up to that to qualify for a workforce housing rate in one of these buildings. And so the way Live Local works is that a developer will go and say, I'm going to build Live Local. So the regulators say, well, at least 40% of this building needs to be for people who make at least 120, up to 120% of AMI.
Daniel, if I can interrupt you.
Yeah.
Daniel? Yeah. So the audience knows AMI is what? Average median
income.
Okay. So I just looked, I asked AI, so it's based on AI, 33 grand in Miami-Dade County to give people context. Sorry to interrupt. Please proceed.
So 33 grand, right. So then average household income, right, that makes sense because average household income is 65 and change. So
yeah, I looked up individual. Oh, no, median household income in Miami-Dade County, yeah, 69,000.
Right. And so depending on what district you're in, this can fluctuate. But the new ordinance, the City of Miami ordinance, right? And they claim that they're trying to step ahead of Live Local, because Live Local, if a developer comes, it's been described as bringing a handgun to the negotiation with these municipalities. So they'll basically come and say, hey, we're going to build Live Local and there's nothing you can do about it. And they're kind of right. And then you have these urban development review boards that are very strong in City of Miami. They look after Brickell, they look after Wynwood, they look after Coconut Grove, and that's kind of like the last stopgap, and these Live Local projects are going to get built. So the City of Miami proposes this. It unanimously gets passed yesterday. This TSND, Transit Station Neighborhood Development, and what it allows is a much smaller piece that building's pie needs to be for workforce housing. So it's what you've always said is kind of like a mullet. Poor people on the bottom, party on the top. And that, I think, is what we're going to see in the name of affordable housing. So the question I pose to you and that I want to discuss is this actually better than Live Local? Is it just different than Live Local, or is it worse than Live Local and it's wrapped in this sheath of it's for the betterment of the city?
Well, my perspective is last week during our 9th episode, because this is the 10th, last week during our 9th episode, I was listening to an interview and I heard the mayor of Miami-Dade County, Levine Cava, and she came out and said that they had a shortfall. Why? Shortfall for over $400 million in the upcoming budget. Why was that? Because valuations had come down. This, I think, is a move to hedge against what happened to Miami during the Great Recession when their credit rating fell to junk bond status, because as prices collapsed, they didn't have money coming in. You pay your 2% property tax, a third goes to the county, a third goes to the school board, a third goes to the city. This is a movement simply to backstop the fact that things cost a lot, plus the politicians need some cash to play with, and they're simply allowing anything and everything to go up. So I would say just think of that big picture-wise as to where we are in the economy. In terms of my perspective, I haven't had a car since 2013. I gave it up voluntarily. It was not court-ordered, And I take public transportation. And what rule do I use? I want about an 8 to 10 block walk to the metro station or some sort of public transportation. So, I mean, the overall strategy makes a lot of sense.